Good evening, ladies and gentlemen. This is Rafey Aleem with the Realtors Café. Hope you guys are doing just fine. We are back with another episode of Realtors Café where we share a lot of tricks and tips with you about real estate and help you navigate through this turbulent Canadian real estate market that we find ourselves currently in. So the new topic of today, obviously, of the sort of this month is, is the rate cut happening September 17th, which is literally in 2 days, and we just can't wait to see what Bank of Canada announces when it calls up the meeting for a rate cut. So obviously, we've seen in the last couple of times that we have not gotten a rate cut, and that's also because of an uncertainty sort of with foreign trade and whatnot. But there is a high chance that the rate will be cut this time around, and a lot of the economists and analysts are predicting that a rate cut would probably be for 0.25%, which is 25 basis points. And, what are the indicators of that? Very simple. We've had about 66,000 jobs that have gone off the market. So 66,000 people have become unemployed, which is not a good sign. Obviously, as an economy, that's something that you don't want. And, obviously in an economy, you want to be able to increase jobs and add more jobs and have more companies come in and more businesses starting up. But it's the other way around. Obviously, Canada as a whole is losing some jobs. Obviously, some businesses not doing well. Some businesses, relocating outside of Canada. Obviously, some businesses not willing or wanting to expand maybe their product line, geographically open more locations. Some businesses have more or less shut down some of their, locations that had not been doing well. So, for various reasons, obviously we're seeing a bit of a downturn in the economy, and obviously 66,000 jobs gone in a single month's time. That is not good news, and obviously for the people that are still thinking that things are just fine, well, they're clearly not. Obviously, this is a major indicator that things are starting to slide down a little bit. With that being said, now what happens after that? Obviously, the rate has two ways. Obviously, either it could remain the same and have the Bank of Canada rate remain the same, or it could come down. And because obviously the jobs have been lost, but at the same time, the inflation rate, which tends to be less than 2% now, which is the target rate of Bank of Canada, even if they are to decrease the interest rate, there's a chance, obviously, that it will still stay under the inflation rate of 2%, which is why a lot of the economists and the analysts are predicting that the rates will eventually come down, obviously in this sort of in the next 2 days. But at the same time, there's about two rate announcements that are about to happen, beginning or before the end of the year. And for that reason, there may be another rate decrease before the end of the year. So we could have potentially two rate decreases before the end of the year. Obviously, there's no guarantee. Obviously, we always have to wait till the rate actually comes down. But these are the predictions and analysis of the economists and the analysts that are pointing towards that there may be two, and potentially another one coming earlier next year, before the March spring 2026 market. So housing sector, obviously one of the bigger sectors in the Canadian economy. Roughly about 1/3 of the economy is somewhat directly dependent on some sort of housing sector. And for that reason, obviously housing taking a big hit obviously affects mortgage industry, affects a lot of different industries, the economy, the buying, the purchasing power. So obviously, if people are not buying a lot of, for example, homes, cars, whatever the case may be, they're holding onto their money in their pocket. That decreases the business for other businesses around, which in turn obviously leads to job losses as well. So what the government and what the policymakers, what they try to do is they obviously try to go ahead and just stimulate the market, right? Like have people, give them consumer confidence in the market to go out and spend. And that is one of the other reasons, obviously, why they go ahead and decrease the interest rate, because they want to increase the consumer confidence in the market, because they want people to feel like, hey, things are still okay. It's cheaper to borrow money. Obviously, like imagine currently maybe you could get a mortgage for 3.75 or 4%. Imagine if it went down to 2% or even 1%. I mean, getting 1% interest rate, it's almost like borrowing money for basically free. So if you're borrowing money for free, obviously you're going to have access to so much capital without having to give a lot back to the bank in payments, which will in turn allow you to, obviously increase your spending and go out there and spend more. So obviously, Bank of Canada, they want you to go out, they want you to spend money, but they obviously don't want to decrease the interest rate to extents that we saw in COVID, where some of the banks were giving out 1.5%, and it was basically free money, or I should at least say access to free money, which allowed people to go out and spend on housing and cars and luxuries and vacations and all that kind of stuff. And though all of that sounds really really good, but at the same time, obviously, when the interest rates all of a sudden hike up, that lifestyle sort of goes out the window very quickly. And if you have obviously taken a lot of loans and stuff, then obviously you have to maintain sort of those payments, and now because the interest rates have gone up, the payments have increased. So you have to be very careful when these kind of turbulent times come, and even if the interest rates do go down, that you don't overspend. You obviously have enough for a rainy day in case, God forbid, anything bad happens. You have a little bit stashed away. So, with that being said, going back to our topic, obviously interest rate may go down this September 17th, and we may have another one going down before the end of this year. With that being said, now is that going to change the real estate market and the data and the trends that we see currently? Well, the thing that we're seeing nowadays is that the housing numbers. So let's say in August, the housing numbers, the number of transactions have slightly gone up, which is a good news. But at the same time, you have to keep in mind the listings have also gone up quite a bit as well. So in the grand scheme of things, yeah, maybe if you compare it to last August, we may have had more sales, but the number of listings are so much more that in the grand scheme of things, it actually doesn't seem like a lot is happening. So just give you a fair example, like maybe there's 10 listings in August last year. 5 sold, 5 didn't sell. At this basic about a 50% ratio. But now what's happening is you have 20 listings in the market, but instead of that 5 selling, you've got 8 selling. So even though there's like 3 more houses are selling from last year, but because there's so many more houses on the market, it's really like, is it really like performing better than last year? Obviously that begs a question that when you look at it in a grand scheme of things, yeah, obviously we're reeling away, probably not doing as well as we should. And obviously when the listings just stay on the market, those number of listings just start tacking on. So there's some listings obviously that have just been sitting out since March of this year, April, May, June, and then they just keep adding on to the listings of this fall as well. So, maybe a little bit of push might be given by this rate cut. I don't know if there's going to be a lot of help because of that. Maybe it would differ your payments per month slightly, but it does give a good amount of consumer confidence where, basically the government, the banks, they're saying, hey, look, you know what? Because obviously there's not a lot of activity, we're making it cheaper for you to borrow money. And that should give a little bit more confidence to the people that are looking to buy in the market. And for the people that are looking to sell, obviously, that have been sitting in the market for a long time and not able to get rid of their house, maybe because of this sort of a boost, they might be able to get, some offers being thrown at their home. And maybe, this is just enough sort of push to kind of get their property out the door. So, that's kind of what we foresee. Obviously, we'll kind of see how things pan out. Now, do we really think that, obviously with this sort of 2 or 3 rate cuts that happened earlier till like, let's say early spring of next year. Like, is that going to become like COVID market? Absolutely not. I don't think Bank of Canada will drop down their rates till, how we saw banks offering 1.5, 2%. I don't think that's going to happen. And for that reason, like, yeah, there may be those rate cuts coming, but I think would be somewhere safe and maybe in the 3% kind of a range, which the banks are offering. Of course, it's not Bank of Canada percentages. These are the banks offering. So somewhere around a 3%, 3 point something percent, which is pretty healthy. And obviously, they have to keep checking if the inflation rate is still within their 2% sort of goal that they set. Their inflation rate to be. Obviously, you have to keep in mind as the interest rates start to go down, the inflation rate starts to kick back up, and they obviously don't want a high inflation rate, because that's exactly what happened in COVID, where interest rates went down and inflation rate went up, and all of a sudden, because of that, the inflation rate had to be kicked up, and inflation went down again. But there's high interest rates, as I mentioned earlier, that people struggled because they had taken a lot of debt together, and for that reason, the payments went up, and a lot of them suffered. A lot of them had to get rid of properties that they couldn't maintain. Cash flow became an issue, and people, some of them lost a lot of their savings in this sort of period from post-COVID till now. So, obviously our show is on real estate, but we obviously try to give you some tips on what you can do in times like this, so you can plan ahead better. Obviously, you can get in touch with us to learn a little bit more about how you can manage your finances. We'd be more than happy to help you budget, forecast, kind of explain to you where market's going, and just help you make some really good decisions, because that's what we're here for. You could always just give us a call, and we'd be more than happy to have you come into our office and sit down with you, and love to chat with you more about real estate. So we're going to take a little bit of a break, and once we come back from the break, we'll have a few more topics. Don't go away. We'll be right back. This is Rafey Aleem with Realtors Café.
Still throwing away money on rent? What if you could own your home instead? On Saturday, September 20th, I'm holding a free first-time homebuyers event right here at my office. You don't want to miss this. There's going to be refreshments, a fun photo shoot opportunity, and most importantly, the answers to all your home buying questions. A mortgage agent will be joining us to guide you through how to get qualified, different financing options, and how to start your home buying journey with confidence. So if you're ready to take that first step, stop renting, start owning. Your first home is just a seminar away, and I will see you there.
Pervez phone for 162309366.
My mission?
My mission?
My mission is to advance the UN's climate goals,
To create global links through game design.
To use technology as a universal language.
Muslim Welfare Canada has made a concerted effort to lead the fight against child labor, poverty, and illiteracy in third world countries through the generous support of our donors. Both girls and boys receive free, good quality education. Help educate a needy child for just $1 a day or $30 per month. Donate generously. Call 1-866-754-3111 or visit mwcanada.org.
Hi Hi guys, welcome back. This is Rafey Aleem with Realtors Café. Hope you guys are doing just fine. After the break, we just wanted to cover a few topics that we have kind of come see up in sort of like the transactions that we currently see. And one of the points that I wanted to share out with you, obviously, these are sort of things that you can keep yourself aware and educated with, so you don't fall into something like that. So recently, we had a situation where a buyer looking for a condo in Toronto went ahead, put an offer in, and they did their due diligence with the mortgage agent, but for whatever reason, before they finalized the mortgage condition, the mortgage agent came back with, hey, like you did not provide me with certain documents. For that reason, I'm not able to do it on your name. I need somebody else's name. And anyways, long story short, they were able to change the purchaser's names on the paperwork, and they because this change happened, in the conditional period, we had to extend sort of the closing forward to account for this change and push out the closing by about, I think it was about 15-20 days. So with that being said, um, you know, so new purchasers' names, no problem. Mortgage got done. Mortgage agent very confident, and we were ready to transfer the funds to the lawyer. And now basically the purchasers were saying, hey, you know what? Instead of that pushed out closing because we had to because the bank needed more time. Purchasers saying, hey, because now our mortgage is done, can we just go ahead and close the house early? And in the grand scheme of things, you would think, hey, vacant unit, sellers obviously holding on to a vacant unit should be super easy. Just get in touch with the lawyer and be like, hey, lawyer, can you just get our closing a little bit ahead? We'd like to close 3 weeks early. Can you just make it happen? Not that easy because there's a lot of steps involved with that. First of all, the mortgage agent has to get in touch with the bank and change the transfer date. That's number one. The lawyer has to change a lot of documents on their ends as well. And also the lawyer on the other side, the seller's lawyer, he also has to prepare for these documents as well and make the preparation and everything. And then you also have to keep in mind the sellers. You can't just assume that they're just going to go ahead and they're going to take an earlier closing. As a buyer, you may think that's a good idea, but you never know what sellers kind of have got going on. Maybe they're busy at that time. Maybe they've got like a bank sort of date that they're trying to line up the closing with, or whatever the case may be. Like, you can't assume these things. You have to obviously get in touch with the seller to get an idea that if that is even possible or not. So what we did was we got in touch with the seller and we said, hey, listen, like this is what we're looking at. We can do it a little bit earlier if you like. We would obviously prefer it to be earlier. We just wanted to be on the safe side. That's why we had extended it in the first place. And they came back with it and said, hey, you know what? We won't be able to do it this week, but we can do it next week. And, for that, we had to get in touch again with the lawyer involved, the mortgage agent involved, the buyer involved to make sure that that was going to be okay, feasible for everybody. And, it seemed like it was. And, we got amendments go on, pushed out and have them signed out by respective parties. So, obviously, the point that I'm trying to make here is that, as it may seem so simple, a lot of these times, especially in real estate, because it's a big purchase, because there's a lot of parties involved, things just tend to take a little bit longer. And that's the reason why, you need to be patient with a lot of different things. And, sometimes you just think, hey, mortgage agent, he's just taking a long time. And that's the reason why, I'm not getting my mortgage done. And, that's why I'm not able to move in earlier. That's definitely not the case. Mortgage agents, obviously, they have a lot of conditions that they have to fulfill in terms of financing is concerned. And, obviously, it's the qualifications because of the interest rates are higher, and there's a lot more checks and balances that are in place. So you have to be mindful of that, and you have to be patient of that as well. That people, the people that they have to understand that what you think is happening in the inside, it's not as simple. And, that's the reason why you have to work with good experts that not only can do it in a timely manner, but also explain to you why things are taking longer and what's the reason for that, so that you can prepare yourself as well. There's another reason. There's another scenario that recently happened where we're selling a condo in Toronto, and everything's done, and the deal is put together, and buyers are super excited as well. It's a beautiful unit. We had it staged really, really well, and the buyers fell in love with it, and now they just want to go ahead. They want to close very quickly. But we're waiting for condo docs, and condo docs, for whatever reason, they're just taking a little bit longer to come. And when they take a little bit longer to come, you know what happens? It just delays a few things, obviously. So they had the home inspection that went fine, but the mortgage and the lawyer review of the status certificate, they got extended because obviously the condo docs just weren't in. And sometimes mortgage companies will ask for these condo docs. So obviously the point that I'm trying to make is just take a little bit to understand that these things can take some time, whether it be the buyer or the seller, or whatever the case may be. And as you see on your screen right now, if you want to advertise, as you saw in the break, advertising is very crucial to anybody's business. And whether it's social media, whether it's platforms like this, make sure to go ahead and advertise. It's going to give a lot of coverage to your business and have the right people reach out to you. And we've got great networks in place, business networks in place that will help you direct traffic to your business and get in touch with like-minded people. That can also push on your business further, right? So one thing is obviously reaching out to clients directly, which obviously that is the main sort of thing. But also keep in mind, like, if you're able to network in business communities, not only you're not just reaching out to that one client, you're reaching out to this business that has a bunch of different clients. So sometimes it does help to network with business owners, and we do have a lot of those networks there. So make sure to do that. And on the last note, obviously real estate, you do see some sort of traction going on. Maybe you are seeing some sold signs go up, on your street, in your neighborhood. And July has been fairly decent, and August numbers have been decent as well. And this may be September, October, could be similar as well. Till obviously November and December comes, and generally speaking, we see those market months sort of trickle down a little bit. The numbers obviously fall, but that could change because of the interest rate cuts that are presumably coming on their way. So don't hold your breath that it's going to change the market drastically, but it should have a little bit of an impact. With that being said, that's all we had for today. Thank you for joining Rafey Aleem at Realtors Café. I'll see you guys next week. Take care and stay blessed.